next step will be step number 4. Once again, step number 4 is to allocate transaction price to the separate performance obligation. Meaning here, we just have to allocate the transaction price determined a while ago in step number 3 to the separate performance obligations we identified in step number 2. Okay? So here, according to paragraph number 75, this step does not apply to contracts with single performance obligation. Sir, bakit naman ganun? Bakit hindi siya nag-a-apply sa mga kontrata na may iisang performance obligation lang? Because obviously, if you only have a single performance obligation, no need to allocate. Because automatically, the transaction price will be allocated to that single performance obligation. Tama ba? So, ang ibig sabihin ngayon, we are only allowed to para bang apply the concept of step number 4 if and only if we have 2 or more performance obligations. Alright? So if we have 2 or more performance obligation, we should allocate the transaction price to the separate performance obligations. Okay? So here, according to paragraph 76, the allocation basis will be the relative fair value or what we call the standalone selling price of each performance obligation. Once again, before a performance obligation can be considered as separate, it must be distinct. And masasabi natin na distincto if we can sell it separately. So, its standalone selling price now or its separate selling price will be the basis in the allocation of transaction price. Okay? So, according as well to paragraph number 78, if the standalone selling price is not directly observable, an entity shall estimate the standalone selling price. So just in case that one of the performance obligation ay walang fair value or walang standalone selling price, according to paragraph 78 of IFRS number 15, kailangan ulit nating mag-estimate. So later, sasabihin ko yung mga methods, i-discuss ko yung mga methods on how we can estimate the standalone selling price of that performance obligation. But in the next slide, try muna natin mag-allocate with the assumption na lahat ng performance obligation may relative fair value or standalone selling price. Alright, so let's now move on in this illustrative problem. Okay, so here Rain Incorporated is a manufacturer of automated whiteboard used in the conduct of CPA review. Rain Incorporated has the following arrangement with Ivana CPA Review Center. Alright, so may konting typo lang dito. It should be Ivana dito sa letter delta. Right? So letter A, Ivana purchases the automated whiteboard from Rain at a price of 1,522,500 and prefer Rain to do the installation and training, and Rain agreed on such arrangements. Okay? Letter B, the fair value of the training sessions is estimated at 217,500. Letter C pala yan. Letter B, the price of the installation service is estimated to have a fair value of 435,000. Letter delta, Ivana is obligated to pay Rain Incorporated the 1,522 contract price upon the delivery and installation of the automated whiteboard. Letter echo, Rain delivers the automated whiteboard on September 1, 2028 and completes the installation on November 1, 2028. Training related to the automated whiteboard starts after the installation and lasts for 5 months. The automated whiteboard has a useful life of 15 years. Letter F, the cost of the automated whiteboard is 23,765. And then the requirement here is what? The requirement is to allocate the transaction price to the different performance obligations. Okay? So since this is already step number 4, let's try to apply the 5-step model up until step number 4 to this problem. Okay? So step number 1, identify the contract. The contract here is between Rain and Ivana. Okay? Step number 2 is to determine the separate performance obligations. So here we have 3 performance obligations. What are those? Performance obligation number 1 will be the automated whiteboard. Okay? Performance obligation number 2 will be what? Performance obligation number 2 is actually the installation. Then number 3 will be the training sessions, right? So PO number 2 will be the installation. Then performance obligation number 3 will be the training session or training services. All right? So that's our step number 2. Step number 3 is to determine the transaction price. According to Information Letter Delta, Ivana is obligated to pay Rain Incorporated the 1522 contract price. So ibig sabihin ngayon, our transaction price, again, our transaction price is actually equal to 1,522,500, right? Now, step number 4, allocate the transaction price to the separate performance obligation. Once again, based on their relative fair value or standalone selling price. Okay? So, lalagay ko dito relative fair value or standalone selling price. Okay? The relative fair value of the whiteboard is actually 1522. So, lalagay ko dito 1522,500. While for the installation, sabi ng letter B, the price of the installation service is estimated to have a fair value of 435,000. So lalagay natin dito 435,000. Then performance obligation number 3, nasa letter C, the fair value of the training sessions is estimated at 217,500. So I'll put here, 217,500. So the total relative fair value now is equal to 1522,500 plus 435,000, then plus 217,500, or this is equal to 2,175,000 pesos. Alright. Now, allocate natin. Once again, let's now allocate the transaction price to the separate performance obligation. Siyempre, gagamitin natin yung ratio ng relative fair value nila. Alright. So, here, 1522,500, right? Divided by, unahin ko yung divide bago yung multiply because apparently mag-error ang electronic calculator. Originally, the computation is 1522,500. That is the transaction price times the standalone selling price of the whiteboard, which is 1522,500, divided by the total, which is 2175. Kaso, 1522,500 times 1522,500 will give you an error. That is why, better if uunahin mo yung divide kapag sobrang haba na ganyan. So, 1522,500 divided by 2175 times 1522,500, that's equal to 1,065,750. Okay? For the installation, same thing, 1522,500 divided by 2175 ka muna, right? And then times natin yan. So 435,000, what you'll compute here is 304,500. Okay? Then last but not the least, 1522,500 divided by 2175 times, right, 217,500, or this is equal to magkano? 1522,500 divided by 2175 times 217,500, or that's equal to 152,250. Adding these three together must give you the transaction price, which is 1522,500. So dapat equal yan. Okay? So sir, bakit ganon? Bakit yung transaction price, yun din po yung relative fair value ng whiteboard service? Well, ganito kasi yan. In our previous standard, which is IAS number 18, right? Kapag meron tayong main product and then apparently meron tayong freebies, that revenue or the transaction price is only allocated to the main product. Well, in this case, yung installation and yung training services parang lumalabas na free. That's why the transaction price is 1522,500 only. Okay? See to it that that is the relative fair value or the standalone selling price of the whiteboard. So see to it here na kahit na free or walang additional payment, no, for the installation and training, see to it na i-allocate pa rin natin yung 1522,500. Because according to IFRS number 15, we should allocate the transaction price to the separate performance obligation. Previously kasi in IAS number 18, see to it nga na walang allocation na nagaganap. So apparently, yung revenue natin dun lang sa main product and then expense as incurred yung freebie, ayaw yun ni IFRS number 15. Okay? So kahit na lumalabas na free yung installation na training, still, right, hindi sila ititreat as free. But instead, we will allocate the single payment of 1522,500 to the three separate performance obligation. Right? So that's step number 4, and that's the allocation of transaction price to the separate performance obligation. Okay? Next, sabi nga natin kanina, right, if the standalone selling price is not directly observable, an entity shall estimate the standalone selling price. Sabi yun ni paragraph 78. So ngayon, punta tayo sa mga methods on how to estimate standalone selling price because paragraph 79 gave us 3 methods. Okay? What are those? Number 1 is the adjusted market assessment approach. Sir, anong meron dyan? Well, kapag sinabi nating adjusted market assessment approach, see to it here that we will consider the prices of the competitors. Why? Because the price of the competitors will be the amount that the customer are willing to pay for your product. Let's say another company is selling an iPhone product, right? If you are selling an iPhone product and wala siyang standalone selling price, see to it na mag-estimate tayo. Okay? So if the competitor is selling the product at sabihin na natin 60,000 pesos, see to it that you cannot sell your product at an amount above 60,000 pesos. You with me? That is why, right, the price of the competitor now will be considered as the standalone selling price with few adjustment, of course, to that price. Kaya siya natawag na adjusted market assessment approach. Sir, bakit adjusted? Because we should consider as well the quality and all other factors related to the performance obligation. Okay? So here in adjusted market assessment approach, we should consider the amount that the customers are willing to pay for our products. And by doing that, we should consider or we should use as standalone selling price the prices of our competitors. Right? So that's the first method. The second method is the cost plus a margin approach, where in here, we should just what? We should just add a certain markup to our cost. So ang ibig sabihin dito sa second method, mag-add ka lang naman ng markup doon sa ating cost, and that's it. That is considered as the standalone selling price already. Okay? Then last but not the least will be the residual approach, wherein under the residual approach from the term itself, kung magkano pa yung natitira, that's it. That's the amount allocated to that performance obligation. But apparently, residual approach can only be used if and only if the standalone selling price or the relative fair value is actually what? Is actually highly uncertain or highly variable. So let's try to apply these 3 methods here on our next illustrative problem. Alright? So here, Ivana company enters into a contract to build, including maintenance, and operates high-rise condominium for a period of 25 years. Okay? Commencing upon the completion of the construction of the said condominiums. The fixed fee to build and operate the building is 100 million. There is a provable evidence that the selling price of the building and maintenance is 30 million and 21 million. So yung construction and yung maintenance, meron po tayong standalone selling price, and that's 30 and 21 million. But none for operating the condominium. It is determined that the transaction price must be allocated to the 3 performance obligations. That's the construction of the building, maintenance, and operating the condominium. Kaso may problema, wala ngang relative fair value yung operation. Okay? So mag-estimate tayo using one of these 3 methods. Okay? So number 1 tayo. The standalone selling price of operating the condominium with reference to the price of the competitors is 31 million pesos daw. Right? So allocate natin. Once again, the requirement here is to allocate the transaction price of 100 million to the 3 performance obligations. So number 1 tayo. So meron tayong construction, meron tayong maintenance, then meron tayong operation. Okay? Once again, the transaction price is equal to 100 million. Standalone selling price of construction is equal to 30 million, 21 million for the maintenance, and with reference to the price of the competitors or by the use of the adjusted market assessment approach, relative fair value or standalone selling price of the operation is 31 million. So 31 million will be put here. The total now will be equal, of course, to 82 million. Okay? So magkano ngayon yung ating magiging allocation? Okay? So calculator please, once again, 100 million times 30 over 82 million, or this is equal to 36,585,366. Okay? Next, 100 million times 21 million divided by 82 million, or this is equal to 25,609,366. 756. And last but not the least, 100 million times 31 million divided by 82 million, or that's equal to 37,804,878. So that's the allocation. And para makasigurado ka, no, na tama ka, add mo lang yung tatlo. So 36,585, 366, plus 25,609, 756, then plus 37,804, 878. As you can see, that will give you a total of 100 million pesos. So that's requirement number 1, and that's an illustration or application of the adjusted market assessment approach. Okay? Method number 2, cost plus a margin approach. So lalagay ko dito number 2, no? So construction, maintenance, and then operation. Once again, the transaction price is equal to 100 million, and the standalone selling price, no, of the construction is 30 million, 21 million for the maintenance. For the operation, let's see. Number 2, Ivana estimates the total cost that will be incurred to operate the condominium, and that is equal to 29.5 million. Normal gross profit is 20%. Ibig sabihin, right, the relative fair value or the standalone selling price now will be equal to 29.5 million times 120%. Kasi kapag sinabing cost plus a margin approach, we should apply the gross profit or the markup to the cost and add it to the same. Okay? So 29.5 million times 1.2, this is actually equal to 35.4 million pesos. So 35.4 million pesos will be the standalone selling price that will be considered here. So 30 plus 21 plus 35.4, the total will be equal to 86.4 million. Okay? Now, punta ngayon tayo, no, dito sa allocation. Let's now move on to the allocation. Right? So dito sa allocation, magkano sa construction? 100 million times 30 divided by 86.4 million, or this is equal to 34,722,222. For the maintenance, that's 100 million times 21 over 86.4 million, or this is equal to 24,305,556. And last but not the least, for the operation, that's 100 million times 35.4 divided by 86.4 million, or this is equal to 40,972,222. Okay? And to check nga whether we are right or wrong, dapat equal yan sa 100 million. So 34,722,222 plus 24,305,556, then plus 40,972,222, or that is equal to 100 million, meaning our allocation is correct. So that's the application of the cost plus a margin approach. Okay? And one last thing will be the residual approach of construction, maintenance, and then operation. So here, sa residual approach, see to it na kapag nag-allocate tayo, diretso na doon. Okay? So ang ibig sabihin dito, diretso tayo sa allocation. At natawag yan na residual approach kasi nga, the residual amount will be allocated to the performance obligation na walang standalone selling price. Okay? So number 3, the standalone selling price for operating the condominium is highly variable or uncertain because Ivana hasn't previously sold the service and hasn't yet determined a price for it. So since the price is highly variable or uncertain, residual approach tayo. Meaning, the 30 million standalone selling price of the construction is allocated already to the construction. The 21 million for the maintenance is the one allocated to the maintenance, and any residual amount will be allocated to the operation. So 100 million minus 30 million minus 21 million, or that's equal to 49 million will be the amount allocated, no, to the operation. Right? So that's the residual approach, and those are the methods just in case one performance obligation does not have any standalone selling price or relative fair value. And that's the end of step number 4. Okay? Now, let's move on, no, here in step number 5. So punta ngayon tayo dito sa step number 5. Okay? This is the last step here in IFRS number 15. So step number 5 is to recognize revenue when each performance obligation is satisfied. Okay? So here, we have two ways on how to satisfy a performance obligation. That is in accordance with paragraph number 32. Okay? Meron tayong dalawa. Ano yung dalawa? Number 1 is the satisfaction over the period of time. Then number 2 is the satisfaction at a point in time. So what's the difference between the two? Ganito lang yan. The performance obligation is actually satisfied at a point in time if after delivering the goods or after rendering the service, the seller or the entity will no longer have any remaining obligation to the buyer. Ibig sabihin, after dineliver yung goods or after nirender yung service, kapag wala ng obligation, yung seller to the buyer, the recognition will be at a point in time. Okay? So if the obligation of the seller, on the other hand, does not end after the delivery or after the rendering of service, because for example, required tayong mag-provide ng updates, required tayong mag-update, dun sa buyer, required tayong mag-provide ng continuing services, see to it that the satisfaction will be over the period of time. Alright? So sir, bakit natin kailangan malaman whether the satisfaction is at a point in time or the satisfaction is over the period of time? Well, you need to know whether the satisfaction is at a point in time or over a period of time or the period of time, because apparently the recognition will be in the same pattern or the same manner. Meaning, if you satisfy the performance obligation at the point in time, see to it that the allocated transaction price to that performance obligation will also be allocated at a point in time, meaning minsanan. Okay? Wala tayong dinidiffer. Pero, if the performance obligation is satisfied over the period of time, always remember that revenue will also be recognized over the period of time, meaning the allocated revenue or transaction price to that performance obligation will be recognized all throughout the period. So, ikakalat mo yan all throughout the period. Alright? So, para mas magets natin yan, let's now move on here on our last problem. So this is the last problem here in IFRS number 15, and this problem will illustrate the whole 5-step model here in IFRS number 15. All right? So they're saying that the greatest impact of this new standard is sa mga telecommunication company, especially sa mga company na nag-o-offer ng postpaid plans. Why? Because let's say si Smart, previously kasi by the use of IAS number 18, see to it na wala pong revenue na nare-recognize with regards to the handset. Because kapag kumuha ka ng postpaid plan, isn't it? May free phone, tama ba? And since free nga yun, walang revenue na nare-recognize doon. Expenses incurred siya. So yung monthly na binabayaran ng client na pupunta lahat doon sa network service. Well, here in IFRS number 15, it will be different. Why? Because this time, the transaction price must be allocated to the handset or to the cell phone and to the network service. So, hindi na po expense as incurred yung handset. Ibig sabihin, meron na ring revenue na ma-allocate doon. You with me? So, para mas magets natin yan, let's move on here in this problem. This problem is created by me, alright? And this is a live problem. Seryoso yung mga data na nilagay ko dito. Okay? So, here, Globe Telecom, again here, Globe Telecom Incorporated, a telecommunications operator, entered into a contract with Rain on March 1, 2027. In line with the contract, Rain subscribes for Globe Telecom's monthly plan for 24 months, and in return, Rain receives a free Apple 256GB iPhone 12 Pro Max, handset from Globe Telecom. Rain is also entitled for monthly network services such as 150GB of data, unlimited all-net text, unlimited calls to Globe and TM, and 150 minutes all-net calls. Rain will pay a monthly fee of 2,499 and cash out of 46,800 upon signing of the contract. Okay? Rain gets the handset immediately after contract signing. Globe Telecoms normally sells monthly plans for 1,482 per month without handset. Then the market value of the iPhone 12 Pro Max is 82,990. The requirement here is assuming that Globe Telecom asks you to apply IFRS 15 with its transaction with Rain. apply the 5 steps process to recognize revenue and determine the revenue for the year 2027. Alright, so isa-isahin natin. Starting with step number 1. Step number 1, once again, is actually to identify the contract. Once again, step number 1 is to identify the contract. Alright, well here, the contract is between, again, the contract here is between Globe and Rain. Alright, so that's step number 1. Ngayon, punta tayo sa step number 2. Step number 2 is to identify the separate performance obligation. Well, here we have 2 separate performance obligation. Ano yung number 1? PO number 1 will be the handset, that is the iPhone 12 Pro Max. Then performance obligation number 2 will be the network service. Network service, yan yung free data, call and text, etc. etc. Okay? Step number 3 tayo. Step number 3 is to determine the transaction price. So we should determine this time the transaction price. So magkano ang magiging transaction price natin? Well, here, meron tayong monthly payment. Again, there is a monthly payment of magkano? Of 2,499. So 2,499 times 24 kasi 24 months yun. That's equal to how much? 499 times 24, that's equal to 59,976. Add natin dyan yung cash out or yung one-time payment na magkano? That's 46,800. And then apparently, this is already our transaction price. So 59,976 plus 46,800, our transaction price is equal to 106,776. So that is step number 3. Okay? Now, punta tayo sa step number 4. Step number 4 is to allocate. Once again, step 4 is to allocate the transaction price. Again, allocate the transaction price to the separate, to the separate performance obligation. Performance obligation. Okay? So in the allocation, once again, based tayo sa relative fair value. Okay? So once again, meron tayong PO1 and PO2. PO1 will be the handset. PO2 will be the network service. Okay? So transaction price as computed a while ago is equal to 106,776. So I'll put here, 106,776. Relative fair value on the other hand of the 2 is equal to how much? For the handset, that's 82,990. So I'll put here, 82,990. Then for the network service, that's equal to 1,482 because that's the standalone selling price. Okay? So that's equal to 1,482 times 24 months kasi 24 months yun. So 1,482 times 24, this is equal to 35,568. Okay? So magkano yung total? 82,990 plus 35,568 is equal to 118,558. Okay? Ngayon, allocate na natin. Magkano yung kay handset? 106,776 times 82,990 divided by 118,558, or this is equal to 74,743. For the network service, that's 106,776 times 35,568 divided by 118,558, or this is equal to 32,033. Okay? Then kapag in-add mo nga yung dalawa, dapat equal yan sa transaction price natin. So 74,743 plus 32,033, that is actually equal to 106,776. Right? So that's step number 4, and that's the allocation of the transaction price to the separate performance obligation. Okay? Ngayon, punta tayo sa step number 5. Again, let's now move on here in our step number 5. Okay? So step number 5, once again, is to recognize. Again, step 5 is to recognize revenue when each performance obligation is satisfied. Again, recognize revenue when each performance obligation is satisfied. You with me? Now, hear me out, guys. Dito, meron po tayong what? Dito, meron po tayong dalawa. At a point in time and over the period of time. As discussed a while ago, if the satisfaction is at a point in time, revenue will also be recognized at a point in time. But if the satisfaction is over the period of time, revenue will also be recognized over the period of time. Okay? So yung handset natin, since according to the problem, right, it is delivered, right? Or Rain gets the handset immediately after the contract signing. Ibig sabihin yung handset natin at a point in time. Again, at a point in time tayo. What do I mean by that? Ang ibig sabihin niyan, the allocated revenue, which is 74,743, will be recognized immediately. On, kailan? Recognized on March 1 because apparently contract signing here is on March 1. So on March 1, recognized na yan outright. You me? But with regards to the network service, Globe cannot provide the network service all at once. Meaning, monthly, kailangan niyang mag-provide ng network services. Monthly, kailangan niyang i-renew yung gigabyte, yung data, yung unicall and text. Tama ba? Therefore, pagdating dun sa network service natin, again, with regards to our network service, situate that over the period of time tayo dito. Again, here, over the period of time tayo. Okay? And if that's the case, the 32,033 allocated revenue now will be recognized over the period of time as well. And that's equal to 24 months. So magkano per month? 32,033 divided by 24, that's equal to 1,335 per month. Again, this is equal to 1,335 per month. Okay? Ngayon, ang tinatanong dito, magkano daw yung revenue for the year 2027? So if March 1, 2027 tayo nag-start, right, 10 months na yung lumipas for the year 2027. So 10 months na tayo nakapag-recognize ng revenue. So I will multiply this by 10. Okay? So 1,335 times 10 is actually equal to 13,350. So as you can see, kapag at a point in time, recognize immediately, all at once. Pero kapag over the period of time, ina-allocate natin yan over the period of time. And apparently now, situate na 13,350 lang ang recognizes revenue. We good? So apparently now, if total revenue ang tinatanong, no, the total revenue, again, the total revenue now for the year 2027 will be equal to 74,743 plus 13,350, or this is equal, no, to 88,093. So the revenue for the year 2027 recognized is equal to 88,093. All right. So that is the answer or the solution for this problem, and this is actually the end of the phase of IFRS number 15. Okay? So I hope you guys learned a lot from our discussion. Thank you and God bless us all.